What's going on, guys? What's up? Yo, yo. All right, guys. Give it like another 5 minutes. Hopefully, your guys' weekend going good though. All right, guys. Let's get it started. If you guys have any questions, just don't hesitate to reach out and ask. All right. So this is just a weekly prep. So all I'm gonna do is just go over what is important for this week, okay? Because I know a lot of us traders, we skip this part, right? We just go right into the session and we don't really know what is actually going on, okay? So I don't want this to continuously happen for you guys. So I am going to do this so you're not caught by surprise by this important economic data that we have going on moving forward, right? So this week brings all the major US data that the Federal Reserve watches, right? Because this data that is coming out is what leads to their forward guidance. So we got inflation, consumer spending, unemployment, and we got manufacturing demand, right? So this is also this week is the Federal Reserve's favorite inflation measure, which is PCE. Okay, so they want to track pretty much how is inflation doing? Is it actually cooling the way that they're expecting it to? They want to look at consumer spending as well. How is people actually paying for their goods? Our demand is still high or is pushing lower? All of this stuff is what actually gives them an idea to what to do in the next rate decision. Okay, so we are seeing pretty cracks, and also this is Thanksgiving weekend, so Thursday and Friday, and I believe Friday is Black Friday as well. So we're most likely, this is one of the reasons why we got all of this data in like just stacked up in the next 2 days, like in a in 20 and 48 hours. It's kind of insane. It's it's going to be pretty tough to trade. Like my opinion, it's going to be extremely tough looking at all of this data all in one shot, but hopefully we could get a good edge. If not, just try to remain patient, guys. But yeah, the Thursday, no, really nothing is going on. Friday, nothing should be going on neither. So right now we have, this is just a prep for you guys to understand what is US PPI, right? So producer inflation, right? So this is an inflation data that measures inflation at businesses wholesale levels. Okay, so it often moves before CPI. Normally we get this print before the CPI print, right? This is why the feds like to track PPI first. It kind of gives them the idea on what CPI is going to go to. Okay, so what happened previously last time we got this print, PPI was more cooler than expected, right? So this PPI has been showing inflation is still pushing down lower the way the Federal Reserve obviously likes. Okay, so what we're going to be expecting for this print, very simple. If we get higher inflation, right, that this is showing that inflation is still a concern, which is a lot of the Federal Reserve's comments lately. They've been pretty much divided, the feds, when it comes to a hawkish or dovish tone for the next rate decision, because they are expecting inflation pressures to rise. So if we get a higher inflation print this week, this is what's going to lead to a stronger dollar. And we probably will see weaker equities, okay? Because that's going to be a hawkish reaction, because this is going to make the Federal Reserve data dependent. They're going to stay patient. They're not going to aggressively cut interest rates. They most likely going to pause rates if inflation does come out higher than expected. Lower inflation, this will confirm the deflationary trend. That would kick the odds off. Everybody's going to be expecting a cut. So this is where we're going to see a weaker dollar, and we're going to see bullish opportunities for gold and U.S. equities like NASDAQ, the S&P 500, etc. Okay, so why this matters? Because for the next rate decision, if PPI stays weak, the Feds is going to have more confidence to cut interest rates. All right. If inflation is more higher, it's just going to give them the breathing room to leave rates, to pause rates and leave them where they are. All right. So very simple when it comes to that. We do also have jobless claims. We get this every week, right? This is small data, but they pay attention to see early warning signs for labor stress. Okay. So we've been seeing unemployment kick up recently. I don't know about you guys, but I've been seeing that Target is doing massive layoffs. Amazon is doing massive layoffs. We just been seeing a lot of companies giving layoffs, right? That's what's going to show in the unemployment print. So if we see that unemployment claims is higher, that shows that more people are losing their jobs, right? That kind of confirms that dovish tone. So if we see the opposite, we see that lower claims, more people are still working, that would be a signal that the labor markets is still tight. That normally leads to a hawkish bias, because the Feds are actually paying attention to labor data. Okay, so this is pretty much, when it comes to the labor markets, this is their last line of defense. So when they see that things are breaking in the labor markets, right, they see that job numbers are actually worse than expected. This is what leads to them actually cutting interest rates. Okay, so we're going to have to focus on labor data moving forward as well. A lot of people overlook durable goods, right? So durable goods is, yeah, like Tyson laid off 5,000 people as well. I think Tyson is a good thing to focus on as well. Let me see one sec. Yeah, thanks, Kalo. I feel like you guys hear me? You guys hear me? Yeah, but I think checking on Tyson is good, because we've been getting comments on that as well. I wouldn't be surprised that the stock this week actually pushes lower, but that's a good catch too, Tyson. All right. All right. Yeah, just keep this going. All right. So durable goods, we pretty much overlook it. If you guys want a better view, go on YouTube, guys. Just go on YouTube. Get out of Instagram. Go to YouTube if you want a better view. TikTok as well. Just go on YouTube. But durable goods, right? Manufacturing demand. This tells us how businesses are investing in long-lasting goods. Okay, so it's a confidence indicator for corporations of America. Very, like, this small data, right? This is not going to really cause a big impact, but depending on the print, could lead to some really good opportunities. Okay, so recently we've just been seeing that data is slowing down. Signal caution in manufacturing and higher recession sensitivity. So what we're going to look for this, if we see that durable goods is strong, right? Business confidence is actually holding up. That normally is good for the stock market. Okay, that's good for the stock market overall. But if we see weaker durable goods confirm a slowdown, right, that could be good for gold, because that's showing that recessionary outlook. Makes sense, guys? So when we get that recessionary outlook, that's what causes gold to rise as a safe haven. But that's also bad for the stock market. So this is really good to pay attention from a sentiment standpoint. Okay, so why this matters? Manufacturing adds pressure to actually little indicators that they pay attention to if we see recessionary fears rates, because data like this is what those little indicators lead for. All right, so definitely something to focus on. All right. All right. Now going to the next one. Lastly, right, we got two more. We got retail sales and PCE. But PCE, this is the main focus. This is what the Feds actually focus on. This is what they really want to pay attention to. So if we see that inflation, right, PCE is actually continuously pushing lower, which is already expected. But just to get you guys an idea, higher PCE, the markets is going to anticipate a hawkish Fed. This is what's going to lead to a stronger dollar, weaker equities. Lower PCE is what's going to lead to a dovish outlook. This is deflationary. This is what's going to make the Feds want to cut interest rates even more, especially next year. So this is what's going to be the main focus, the main event for this week. And we also have retail sales. That's lastly, just so you guys can see this as well. This is a good indicator too, because they want to focus on consumer spending. How is consumers actually spending their money in businesses? So this is also shows if the economy is still running hot or consumers are slowing down. This is where recessionary fears do rise, is because they like to focus on what is consumers are actually doing on a daily basis, right? Are you still paying for those high priced goods? So retail sales is also going to be a major print. This week is going to be pretty crazy. It's going to be pretty stacked. All right. So I just want you guys to be prepared. So bullish, like stronger dollar, hawkish data. If we get higher PPI, strong retail sales, lower jobless claims, stronger durable goods, and if PCE could be higher than expected, this is going to be a stronger dollar, stronger yields, weaker gold, and we can see equity markets pull back. All right, this is a perfect scenario for a perfect world, which we're most likely we're not going to get. All right, so we can just throw that out there. We most likely ain't going to get that, but just to give you guys an idea for the easiest opportunities, bearish scenario is if PPI, retail sales, jobless claims, durable goods, and PCE all come in worse than expected. All right. We're going to see a weaker dollar, stronger gold, and we're going to see the equity markets push higher. That's a perfect world. All right. But at least you guys could get the idea, right, on, again, what to pay attention to just in case if we actually get that. But that's just a perfect world. I'm not, normally we're not going to get that, but hey, you never know, guys. All right. What else that we're going to have this week is the RBNZ rate decision. I know most of you guys don't trade it, but this is what we do focus on with the private group. We focus on all the rate decisions. When it comes to this one, it's important to focus because they're at the ending of their cutting cycle. So we could actually start seeing bigger opportunities, like really bigger moves for the NZD currency if they give us the hints, right? One of the things that I want to see is that if they're pretty much saying that they're going to slow down on interest rate cuts, right? That could cause NZD to push higher because they're at the end of that cycle. So I think it's going to be very important for us to focus on this event. And I'm excited to trade this one live. We also have this week is the autumn budget for the United Kingdom, right? The autumn forecast. This is going to set the tone for the United Kingdom, right? Because this is exactly what impacts the Bank of England's rate decision as well, right? Because if the forecast, they're going to talk about growth, they're going to talk about taxes, all of this stuff that is about the United Kingdom's economy. So for you guys that like to trade the pound pairs, right, and if you want to trade the FTSE, this is going to be something that will impact this week. It's very big, all right? So this is what they're actually waiting for before they actually make their decision, okay? So now let's look at the economic calendar. So a lot of the data is just going to be Tuesday and Wednesday. So remember, we have a holiday. Tuesday, this is where we're going to get the PPI data. We're going to get retail sales, all right, at 8:30. So this is where we're going to be live and we're going to focus on those events. And then at 10 is consumer confidence. We normally don't get data like this all in one shot, but you have to be cautious. And when you trade in these events, guys, just take it one step, one print at a time, right? If you don't get a clear edge, if it's hawkish or dovish, then don't trade it, all right? Because you have to take advantage of a clear edge. You don't, because if we get PPIs higher, but then retail sales is lower, consumer confidence is lower, that's going to be a mixed reaction. And it's going to be very hard to capitalize on that. All right. And then on Wednesday, this is where we get the rest of the data. But that Tuesday night, we got Australia's inflation, which we are going to focus on live, and the RBNZ rate decision. So AUD inflation, I'm excited for that. We've been taking really good opportunities, taking those buys on AUD when we get the data to come out, because we've been seeing higher inflation for Australia. So this is going to be exciting too. Wednesday, that's the last day. We're going to get PCE, and we got GDP and durable goods, okay? All of that is coming out at 8:30. So this week is wild, because this is going to impact, depending on what happens, right? This is going to impact December's rate decision. And we have no Fed speakers this week, which is crazy, right? We got no Fed speakers this week. So this is showing that they are focusing on economic data. All right. So Monday, nothing is going to really go on, but we still have to focus on the comments, right, of the Feds, which is going to be important to focus on, because whatever happens here, we're going to take advantage of some good opportunities. All right. So yeah, we can look at gold real quick, because we could take advantage, like you can take advantage of some technical opportunities with gold. It's a reason why price is ranging, right? Because it's waiting. It's more likely we're going to see gold wait until data, right? We need to see if we get a recession or we're seeing strong growth. So if you guys want to trade gold, I think the best option is just waiting for technicals, and just look at it here. Got you guys. Yeah. So to me personally, if you're looking for buys, I would rather be cautious, because I don't want you, it's not worth it trading within the range unless we get some important headline to come out. If we hear something from China, China trade talks, supposedly it's going well, but if we see problems when it comes to China and the US, that's going to cause gold to rise, right? So that's something to focus on, is trade talks with China over the US session. But if you're just looking at from a technical perspective, right, you're going to want to see gold holding above 4110. If we could break above 4110, this is what's going to lead to a really good opportunity. You could take advantage of that scalp of price pushing higher. I say that the target could be around 4132. So I would say the safer buys is going to be above 4110. Okay. Just look at the market structure. The price points can be different from mine to yours, but that's a clear area of resistance if you want to take advantage of the safer buy. A high risk sell, just because of where we are now, I would personally say wait until about 9 p.m. Eastern. That's when we get Asia Pac open. If we start breaking below this area of support, right, this is what's going to lead to a really good sell. I would say this is in the range, but if we could break that support, break below 4060, it's going to be a higher probability gold could retest around 4030. Breaking below this support of 4030, this is most likely going to cause gold to continue to rally lower, right? If we could get the confirms of stronger dollar and stronger yields, that will kind of give you that extra confluence for gold sells, okay? But if gold breaks out higher, I would just focus on technicals mostly, because we don't really have anything fundamentally that is causing the markets, right, for this moment to take advantage of a certain direction, because we don't have the data yet. So it's best either if you take in technicals only, if not, then just wait for economic data. All right. So that's what I'm going to wait for. I'm going to wait for the data. I'm not going to personally just trade technicals. I'm going to try to be pretty much cautious this week and just wait for those opportunities to come out. But All right, guys. This is just a quick weekly prep. And if you guys have any questions, just don't hesitate to reach out.